What's happening, guys, and welcome back to another Sunday Scan. I hope that everyone had a great week and weekend. If you are joining us for the first time, we are Investors Underground, and every single week we do a weekly scan to basically catch you up on everything that happened in the prior week and then help you to get prepared for trading the week ahead. So we'll go over a bunch of tickers that were in play. We'll go over a bunch of squeezes and other things that were happening. We'll talk about some macro stuff very briefly, things with the Fed, things with earnings season, and then we'll really get into some specific tickers and things to watch in the week ahead. So make sure that you like, share, and subscribe, and stay to the end of the video because we're going to go over a bunch of great things. So before I get into all that, I will just give the disclaimer now that I'm not a financial advisor and these are not buy or sell recommendations. Everything I'm about to talk about is for educational and informational purposes only. So I'm going to pull up a chart and then we're going to go over a bunch of different market concepts and ideas, and we will get right into it. So kind of a choppy week in SPY overall. We had a bunch of things kind of happening at the same time. We had earnings week. We had the Federal Reserve meeting, and they cut interest rates, and they said that they were going to wind down some quantitative tightening stuff. We had a Trump and President Xi meeting, and just a bunch of things that were happening. And what tends to happen when you have a very action-packed week is, yes, you'll get some sharp moves one way or the other, but if there's nothing like absolutely earth-shattering, a lot of times you're basically just bouncing off the edges of a range while people, kind of get some theses right, they get some of them wrong, and you kind of meet somewhere in the middle. And there's a lot of hedges and things like that that are kind of melting off, after these events. So a lot of times during action-packed weeks, you get a lot of very range-bound activity. And sometimes that can make scanning for the week ahead a little bit more tricky, because if you're relying on, okay, what were the most in-play tickers, this week, and if everything was kind of range-bound, a little bit choppy and everything like that, it can make it difficult to prepare for the next week. But there's always pockets that you can find. So we found a bunch of pockets to go over in some micro caps, in some small caps, and some large caps, and everything. So let's get right into a couple of the big moves that were happening this week. So the first one was this CMBM, and this was a nice small cap move. And this was really the demonstration of a concept that Nate talks about a lot, and he had some great warnings on this on social media. And he was basically saying that after periods of time when, one strategy or one group of traders is usually winning a lot, you usually have something to kind of counteract that and reset the cycle. And so what he meant by that is that after some of the action that we've had recently with names like BYND and some of the other craziness from the last few weeks, and you had some fantastic moves to the upside, and then a lot of people, especially active traders, really nailed this to the downside. And short sellers made a killing on this. It was so liquid. It was so such an opportunity for so many people and their styles that a lot of times after that, you'll get a couple of more names that people are aggressive with. They just made a bunch of money. They plow that money back into other names. But what happens is that you have people use the same type of mindset after a big win like this, and they carry it over into a name or a stock that does not meet the same quality of opportunity than that this one was. So for instance, this one got up to a couple billion dollar market cap, bunch of volume traded over $1 billion, or sometimes I think even 2 billion shares were traded on a name like this. And so basically people, especially, active traders with very large accounts, they can be in and out of names like this very easily. There's a ton of liquidity. And so, a lot of times after nailing a trade like this, they're looking to do the exact same thing, but they'll apply it to a name that is, a very, very small company, very small float. And, it might have a lot of volume and everything, but it's not the same type of liquidity where they can get in and out, no problem. So a lot of times taking that old mindset from BYND into some other names, that's where Nate's warning comes in, where it's like, okay, be on the lookout, especially if someone is more of a short biased trader. Be on the lookout for one of these black swans to really kind of surface, because a lot of times after short-term cycle turns, you'll get those things to reset the sector. And so basically CMBM was the example of that playing out in real time, where after people were super aggressive, one of these is bound to get away, and they tend to be very, very strong squeezers. And those are the names that I like to participate in, especially more of a long bias trader in small caps. And then with options, I, of course, go both ways with calls and puts. But for the small cap space, I really enjoy, finding squeezes. And so a name like this is a great example of, okay, big move up in pre-market, flushes out, and then it just starts to basically retrace maybe half the gains or so, and then just starts to go sideways and starts to build throughout the day. So I'm actually going to zoom in a little bit more so that you can see some of this action. So this was really the initial move here in pre-market. Big move up. And now this goes on everyone's radar who's a short bias trader. This is one of the big gappers of the day. It has a ton of volume traded. And so it's on everyone's radar because, 8 out of 10 of these small caps that gap up tend to kind of just, putter out, especially near the open, and then they kind of retrace that whole move. But what happens to the ones that don't do that? They become extra trappy. And if you have people using massive size, we're talking millions or tens of millions in some cases, position sizing for some of these people, this can be a massive trap. And so let's go over some of the action and what to look for on these trappy names. So initial move up in pre-market, a ton of volume. So it's on all the short sellers' radar. I often talk about what happens with squeezes is you have a couple of things. One, you have an invitation. That is something that gets short sellers interested. You can't really have a short squeeze without short sellers present. So the first invitation here was you had a name that was gapping up a ton on the day, and it's probably the biggest runner in pre-market. So it's on everyone's radar from the short side right there. The second part of it is you have trappy action. The second part of a short squeeze. So basically, after this initial move down, it just started to consolidate. So people who maybe nailed the short off the open, they're just adding in, maybe looking at these pops, adding, trying to add. Okay, now it starts to grind up a little bit much, and now you get to what's called a trigger point somewhere around here. And a trigger point is basically when one side has nailed a move. So if you had a bunch of shorts that were really adding in here, once it grinds up to the average cost that's just the shorts are in, that tends to get close to a trigger point. And a trigger point is simply when does one side, so when are the short sellers likely going to start stopping out and saying, you know what, I was probably wrong on that. It's grinding up. This one's, kind of getting away from me. And that's when you can really trigger a squeeze. And so basically, I talk about this concept in the room in Investors Underground a decent amount, that a lot of times people see squeezes as one event, as one thing. But what tends to happen with squeezes, especially with low floats or small caps like this, is it's a series of squeezes altogether. So you have maybe 3, 4, 5 different squeezes happening within a move, but it just kind of looks like one squeeze. And sometimes you do get one massive squeeze that kind of clears out everyone that's in there. But a lot of times it kind of happens in phases. So basically, you have this move up in pre-market, this fade down. It's kind of holding this base and starting to build higher lows and is grinding back up towards that trigger point. And then that is around the time when it starts to, either shorts get even more aggressive and they add to it. And like maybe that's what you had here, this extra trap here. So after it had like a mini squeeze or one part of the squeeze, maybe some price sensitive shorts were squeezed out, but maybe you had more of the aggressive or the swing shorts still in. Then you have this, basically flush here, and maybe all those people double down and, suddenly you get saved again. So now everyone's in an even worse position. And so that's how you can really get some of those massive squeezes and basically can replicate that first leg. So, initial move, trappy action, trigger point, and then the actual squeeze when it's clearing everyone out. And then what happens after a squeeze? So basically after a squeeze, you basically reset the positioning. And that just means that a lot of the short sellers were already blown out. And so you can get a little bit long crowded. And so after that squeeze, you basically go into like the next phase, which is kind of like that, big picture failed follow through. And so sometimes after the squeeze, you get a lot of that like back and forth, that channel consolidation. And this was in a pretty large range, but you basically have it resetting the supply demand profile where you essentially have the shorts are now, mostly less aggressive up here because they're scared after this big squeeze, and you have longs getting more and more aggressive. And so what happens is that it's like the reverse of a squeeze. So here you have the short sellers that were, aggressive and they get squeezed out. Now you have the longs that are getting aggressive and it breaks below that trigger point, and suddenly they're getting flushed out. So a squeeze that really has, different parts of it. It's just a cycle of, initially you have a move up, but, because there wasn't, this happened so quickly, there probably wasn't a chance for a lot of longs to get in here to really win. So maybe you just had like an initial move up and it was very thin on the supply side. So it was able to move a lot. And then you have all the supply come in and aggressive shorts down here. Then it starts to grind up, trigger, and then, does the squeeze. And now you have shorts kind of blown out. Longs get more aggressive. They get their average cost up higher, consolidates, and then the next morning kind of ramped up in the morning, failed to follow through, and then you have that big unwind. And that's basically the difference between the front side and the back side of a move. It's thin on the supply side on the way up, shorts get squeezed, and then you basically have a big consolidation, and longs get their average cost higher. The supply demand profile changes, and then you basically have that all fall apart, and it kind of goes back to where it came from. So just a good example to kind of go over. This is very common, and it's not exclusive to this name. We'll actually go over a couple more things like INTS, very, very similar type of situation where you can see, again, big move up in pre-market. And then you basically have the shorts get in here, but this is like a different variation of the same kind of thing that we saw on CMBM. So basically, big move up in pre-market, it starts to get saved, and then it's kind of holding this base, and then it's more and more invitations to short. So basically, people might be adding back in here, adding back in here, adding back in here, and now it's kind of grinding up past that, average cost that the shorts are in, and then you kind of have that mini blowout here. Maybe trap some more shorts who add into it, especially the aggressive ones. And then it's kind of the same thing where now you have that actual big blowout move. So basically the same type of situation to be aware of. If you like playing squeezes on the long side, this is good action to look for. It's a setup that I trade a lot. And then if you're on the short side, basically, if you notice this action, big move up in pre-market, trappy action, just know that you probably need a very aggressive, very large move to clear out all those shorts. So basically, when shorts actually want to get interested in a move like this, it's after you have to estimate when are almost all of these shorts from here all blown out. When would all those people stop out? And then when it starts to basically go parabolic and crack after all of that, after you think all the shorts have been blown out, that is when you want to get interested on the short side, because the supply demand profile is much more favorable to a short bias view than a long bias view at that point. So basically, those are just a couple of moves, and we actually saw something pretty similar with HKD. And so we'll kind of go over the same type of concept with that. So I'll basically pull up this move, and you can see very, very similar type of action there. Again, big move up in pre-market, kind of holds those lows, and then it kind of grinds up. This one happened a little bit sooner. Some of the other ones took all day, but this one, you can notice that it held pretty well, those lows. It didn't dip as far as some of the other ones. So if it didn't dip as far, it doesn't need to consolidate for as long. So trappy action can just be, people got aggressive in here and starts grinding up towards the average cost. And now, again, you have that big squeeze out move. And then again, if you actually want to participate on the short side in something like this, then you basically have to estimate when is all the shorts from here blown out, and now it's not short crowded anymore, but it is getting long crowded once the supply demand profile changes. And that's when you want to start to get interested, not too soon. So basically, those are a couple of moves in the small caps that I want to go over. And it's just a really good, important concept to focus on of just, estimating that supply demand profile, understanding how short squeeze is happening, happen. And then just in the context of market cycles, you go from something where BYND short sellers were all winning and they were all super aggressive with basically unlimited liquidity there. And then you basically get people try to replicate that, but in a much different type of vehicle, like a super small float, small cap stock. And so those are just a couple of concepts that I think are useful to people. So I'll go through a couple more names now. We had some good breaking news trades over the last couple of days too, especially in Investors Underground, because we get some of the probably, I would say other than like a Bloomberg terminal for some people, we probably have the fastest, news and some of the fastest news traders in the world, really getting that information out there. We have AI scrapers that are kind of pulling everything. And so when something like this happens, we're getting the headline as soon as it drops. And sometimes a little bit before, if we have people who have like specialized news sources that are moderators in the Investors Underground room that are sharing that. So sometimes we get the headlines even before they drop on like the mainstream media headlines, because sometimes they show up in niche places first. So basically, mRNA was a good example of a nice breaking news trade that someone could have capitalized on with options or equity. I actually took calls on this. It wasn't a huge position, but it was a nice win there. And basically, a good way that I like to view breaking news trades, especially with certain stocks, is I like to have breaking news trades on what I call like powder keg stocks. And so basically that means that stocks that are usually pretty beaten down, pretty neglected, and they have a good amount of short interest in them, because that means that if you get a really positive headline, a lot of times you have a lot of short interest come off on those. And you basically have a reset of positioning from ultra bearish, probably for good reason, to now, okay, we have to reset the tape a little bit because there was this news headline. So I like to focus on those, and that can actually help a lot with my range anticipation of looking at like, okay, how much short interest do these actually have on them? And then kind of using levels, using other tools that I have at my disposal. I'm looking at, how far do I think that this could go? And then I'm using that for breaking news trades. So basically with breaking news trades, you want, a good headline. So basically the chatter with something like this was that, someone, a big pharma company could potentially be interested in acquiring them at some point. And so usually when companies acquire other companies, you're getting anywhere from a 30 to 50% kind of, premium to whatever the price that they're trading at. And so a lot of times if you were to use like a base case of, 30% or so, that can be, a decent thing to help you estimate your range anticipation. So if I think that, okay, if this were actually to get bought out, it'd probably be at around a 30% premium. So maybe because it's still speculative, maybe this goes up 15% or 20% to kind of, account for some of that rumor, but it doesn't go all the way up because it's not a confirmed report. So, you're looking at a 15, 20% move on something like this, which can be very substantial, especially on a Thursday, afternoon when the options are pretty cheap on this. So I got some 26 strike call options on this, and they ended up going from 30, 40 cents up to $2 or something like that. So you can get some really, really nice trades on those, especially if you get the news quickly, which we do in Investors Underground. And then if you're able to kind of interpret that and use a couple of tools at your disposal. We had another breaking news trade, very similar concept, but this one actually went more in GSAT. And again, very, very fast news in Investors Underground. We got the breaking news here, and this halted up immediately, but it also unhalted as it was moving up. So you have little windows where you can participate in this. And again, using that 30% kind of baseline case that, okay, if this were to get acquired, the chatter here was possibly being acquired by SpaceX or having some acquisition interest from them. So again, using that same kind of template, you can kind of estimate your range. Pretty neglected stock, and then big piece of good news on there. So I'm sure you have some short interest getting cleared out. You have people like the arbitrage traders basically closing that gap between what would be the acquisition price and not. And then again, if this has options traded on it, then you can have some really nice moves there. Or even with just equity, kind of using where it came from as your risk area. Like if this was forming a nice base and it had breaking news, a lot of times you can just risk that area. Or if it's in between halts, then you just don't want it to go too far back from where that was. So they can be really good risk to reward trades to participate in. Now, some like bigger picture moves. Let's go on to Tesla. So Tesla has had some big moves recently, and let's zoom into kind of this move after earnings. So basically a nice consolidation here. They had some earnings, had some different choppy moves based on that, but still holding this overall range. And so Tesla is probably building as long as the market itself holds up. I always say that Tesla's like a good kind of speculation gauge. It's a good bull market, trading off of vibes and hope, and people are excited, and they do have a lot of obviously promising things in the future with robotics and all that stuff. But from a trader's perspective, not a super long-term perspective, you just want a name that's holding up technically pretty well, and it's doing well with the NASDAQ and all these other things. So Tesla is building a nice base, and probably it'll most likely, I would say, have a big breakout in the coming weeks or months. Maybe not necessarily this upcoming week, but I could see it getting a lot of interest. And once it starts to break above some of these key levels, I think you can have a nice move into the 500s or so. We also had the FANG earnings, or the Mag 7 earnings. A lot of them this week. We had things like Amazon, massive move up. It's doing really well with basically the AWS growth, and then their AI infrastructure and everything like that. So that was a big earnings winner. Google was another pretty big earnings winner there. Again, nice base consolidating here. This is kind of like what I was talking about with Tesla, one of those big bases where it's almost like just a big build, higher lows, and then it starts to have a blow off move. You could see how that kind of played out in Google. Apple also had a nice, pretty move on earnings. And then Microsoft had a little bit of a rejection there. That was a little bit weaker. And then the weakest one was Meta. So basically, what happened with Meta is that due to a one-off tax charge, they basically you kind of missed on some of their earnings expectations there. And then they also did, I think, a $25 billion, some kind of bond that they issued or convertible note or something like that. That they issued to help fund some of their AI infrastructure. But I think a lot of people have PTSD from Meta because back in 2022, remember that's when they were doing their reality labs and kind of like the metaverse stuff. And so basically what Zuckerberg did is he was spending a ton of money without, getting some of the return on investment for that. And that hit their free cash flow and everything. And so basically you had a massive move down in 2022, partly related to the Fed cycle, partly related to some of the fundamental things for the company. So I don't think that Meta is anywhere near that situation again. Again, this was more of a one-off, tax charge kind of thing. But I think that people are sensitive, especially institutions. Institutions might be sensitive to, okay, they're doing all this spending on AI infrastructure. And yes, it's been helping with the revenue, but I think it might have spooked some people with that, tax charge, just saying that, okay, if Meta's missing earnings or missing, rough earnings estimates, and they're still doubling down and even borrowing to do some of the AI spending, that might not be the best look for them. So not necessarily a full unwind here, but a pretty big move down. And we could be testing this $600 or low 600s level in the near future, kind of until this gains its footing, and then maybe there's some more context given around it. But this is below some key moving averages. It's definitely the weakest of the Mag 7 names, and kind of like maybe the first warning shot that, okay, if names aren't, if they're priced for perfection and something isn't perfect about them, they kind of get, revalued lower to reflect some of that. So just a couple thoughts on Meta there. And then NVIDIA, again, doing really well. Big base and breakout that it had. And again, with all the Mag 7 names, their spending on AI infrastructure basically goes into NVIDIA in a big way with data centers and with all that stuff. So basically, NVIDIA, good reaction to all the Mag 7 earnings, which is a key thing for their earnings. And they report usually a couple weeks or a month or so after some of the other Mag 7 names. So basically, NVIDIA priced in all the good earnings that the Mag 7 names had. It reaffirmed that they're spending a bunch of stuff. And then you also had some things with Trump and President Xi talking about, basically healing some trade relations there, allegedly, who knows. But maybe that if the China market were to eventually open up to NVIDIA, because right now it's not really in the China market at all. But if that were to open back up, then that could be a big, driver of some of their revenue as well in the future. A couple other names kind of on radar. Palantir has earnings on Monday. This has been a big one, big runner in this market. And, usually around earnings, it's just a big time to tell, okay, is everything living up to the expectations or is something off? So no real trade plan going into it, but just to be very aware that Palantir will be in play this week. And so just kind of watching out for headlines, watching out for earnings, and possibly some big reactions on that. HIMS, I also believe, has earnings on Monday or sometime this week. I think it's Monday, but basically big, range consolidation here. And that, if you're coming up on the lower end of a range and it has earnings coming up, you better have some pretty good results, because otherwise, it can break out of this range. And then all the longs that are in here from this range can basically get flushed out, and you can get some really big unwinds there. So again, not like a solid trade plan, just be aware that some of these names have earnings this week, and they can have some massive moves off of that. So being there for breaking news, being there for, participating and following trends, if it's either really good news or really bad news, that is something worthwhile to keep on watch for the week ahead. UU also has earnings this week. Again, big runner with the rare earth theme. We saw some other names like MP, much more weak, but UU has been very strong. It's had some bullish options flow, so we'll see if earnings live up to that. And again, like one of the things with these rare earth names, it's not just sourcing the material. A lot of times, the big part of the story is that they also process the rare earth materials. And so if you only have a couple of facilities or processes, within the United States to kind of get some of those rare earth numbers up, then that is part of a reason why something like this has been so key, during this market cycle. Quick thoughts on quantum, a little bit of rebounding of the quantum names, but relative strength in RGTI, relative weakness in IONQ and other things like QUBT. So no real thoughts there. And Nate likes to use these as like the daily drivers. So basically names that are very liquid, pretty large, and they have, $3-4 of range almost every day, if not more. They can be pretty good for, if you just are buying the dip off the morning, or if, after exhaustion points, participating in the short side, they can be pretty good things to trade, especially while the market itself is just kind of consolidating. This one is on watch for me for a liquidity trap. Again, not like an ideal setup here, but I do want to have this on watch in case it starts to build. With the liquidity traps, you want a day with a big move up and a ton of volume associated. I think this had like 400 million volume. And then in the coming days, the volume dries up by like 90%. So it went from 400 million volume to maybe 10 million volume. So even more than 90%. And then it went down to a couple million volume on Friday. And so basically, if any of the volume starts to come back in, if this starts to reclaim any levels, could have a nice liquidity trap squeeze there. But something that can disrupt liquidity traps that doesn't get talked about too much is that if you have a name with dilution that is exercising that dilution on the first day, sometimes that can kill the liquidity trap later on, because that dilution doesn't show up in the volume in the same way. So what I mean by that is if this had warrants or other things, and if they were diluting heavily during that first day, yes, they might have done 400 million volume, but if they did a bunch of warrants and other things, the shorts basically are not constrained on their liquidity because they added to the float. And so it's not exactly the same. So if they're adding to the float, during this process, it can dampen the reaction down the road. So I don't know if that's the case, but I think, telling by some of the action, I want to keep this on radar, but I'm very open to the possibility that they were diluting and that could, potentially just not allow it to squeeze. So I want to see the action confirm if I think it's going to squeeze out and cause liquidity trap. So I want to be building, reclaiming some of these levels, and then you can participate as that squeeze is kind of happening. But just be aware that sometimes when liquidity traps don't work, it's because they're adding to the float, and that kind of that lets out the tension in the tape that I talk about on some of my other videos with liquidity traps. BE, so I did end up getting back into this one. I talked about this last week on Scan. I'll go to the daily chart here. So basically, my thought process was this: I've been, in and out of this stock all year, kind of swinging it and doing a bunch of stuff. Talking about the speed ups, the mean reversions. So basically where I was is that around here or so, I think like 118 or something like that, basically dumped, the remainder of the position that I had. And then, because I want to avoid a big mean reversion that I thought, was kind of coming in the momentum names. And so basically, even though I added back in right around that same price, 115, 118, somewhere around there, I wanted to, I actually added in after hours on the earnings day. I just want to make sure that the earnings were going to be good and they weren't going to do any massive dilution. I didn't want to get caught in that big thing. So even though, kind of get back in around the same price that you got out at, I avoided, a good amount of things here, and I got some extra confirmation. So just this, because it's the same price doesn't mean it's the same edge. So I had a better edge, in my opinion, when I got back in after hours after they reported earnings, and then it really had a nice move up to like the 140 area or so, and then you kind of just consolidating in this range. So as long as it's holding that 115 area, I can use that as kind of a risk level. So risk a few bucks, and then just it depends on how aggressive people want to be. You could be trimming into the 140s or anything like that, or just kind of waiting for this to build. And then if it's a more long-term name, then you can hold on for that. So another thing, we had an Elon and Joe Rogan podcast drop, and that kind of ignited some interest in flying cars. And Elon was talking about some things with the upcoming Roadster and prototype, and possibly like James Bond style stuff going on with like flying cars, or I don't know if it's going to be like a boat or whatever it is, whatever they're doing there. But basically got some excitement into the flying car industry, or the eVTOL, basically flying vehicles. So Joby and a couple other names are on watch for that. So you can basically see if this starts to build into that event with some anticipation, or if that kind of just putters out, then maybe it goes back to where it came from. But that's a good name to have on watch. And then lastly, this name, big unwind. I'll actually go to the weekly chart, which is very rare that I do, but you can see how big of an unwind FI has had. Basically, they missed on earnings, they missed on guidance, all that stuff. So basically, huge unwind, and you can see just the pace of this. And so what I'm looking for is possibly some capitulation down to this low 60 area, maybe even below, and then a big bounce. So definitely not participating on the downside anymore, but really looking for if there's an opportunity where this has another little panic, and then just using some kind of low as a risk point for right side of the V kind of style, where it can have a nice bounce on that. So those are basically the names that I want to go over on Sunday Scan this week. Hopefully it was useful to you. Again, we go over a lot of trading concepts. We try to recap, what was the action happening in the past week and what are some things to pay attention to in the week ahead. So hopefully that was valuable to you. Make sure that you like, subscribe, share this with a trading buddy, get them prepared for the week, and then also leave a comment. We really appreciate when people leave comments. You can either give feedback of what you want to see. You can, roast me for, whatever, like just leave a comment and we'll engage with you. And we always appreciate that. So we really appreciate you sticking around to the end of the video. And I hope that everyone has a great week ahead in Investors Underground and elsewhere. We'll see you in the room.